a little crazy. I mean, it's not surprising that a politician would like to see markets take off like a rocket ship. It's the job of the Fed to think longer term.
Like a rocket ship?
I'm not sure, because if you think that the Fed is beholden to politicians, then you're starting to lose the credibility of the institution as the arbiter of sort of the longer run business cycle. I think we rely on the Fed to be the grown-ups in the room. And so, I think the president's just job owning. I don't think that the Fed's going to change anything about the way it makes decisions.
But even though he's just job owning, he's not really calling there for quantitative easing. It's just his way of articulating that he wants more dovish policy. I don't think he's actually saying that's what should happen. And when he went through his second sentence as well, he said end quantitative tightening rather than repeat the call for quantitative easing. I think it's just what kind of came out, as opposed to specifically saying he thinks rates should be at 0.5% and we should be buying bonds aggressively.
I don't think he'd be sad about quantitative easing, but again, he wants to juice up the economy. And the Fed is thinking more medium term, through the business cycle. Where are we? What's the right mix of policy for the economy as it stands?
Ethan, does the economy need more loose policy, depending how severe that loose policy could be?
No, I think Julia is absolutely right. It doesn't make any sense to ease monetary policy right now. The economy looks quite healthy. We're slowing down from some unsustainable growth rates from last year where we were juiced up with fiscal policy, slowing to 2%, but that's healthy growth for the U.S., and financial conditions remain very supportive of growth. The Fed is a long way from imposing real pain on the economy or the market, so I don't understand why we want to throw gasoline on the fire when it's already burning nicely.
I mean, what would happen if we did? What would happen if the president got his wish?
Well, I think the danger in doing an easing now is twofold in very different directions. One, it might scare the markets because they'd wonder, A, is the Fed giving in to politicians and losing their independence? Or B, do they see something really ugly out there that none of the rest of us see and are easing because of that? The other risk, of course, is that financial conditions are already quite easy. You've got very low credit spreads, strong stock market, and a little bit of irrational exuberance out there. And I don't think they want to juice that up even more. I think they're correctly happy with a modestly hot labor market and modestly hot financial conditions. That's a kind of a reasonable policy for right now.